Hi guys, welcome back. I want to review with you the silver bullet times and the possible silver bullet entries for the first week of April 2024. So let's go through it all together. Let's replay the price movements, let's look at the silver bullet times, and let's see where we would have an entry and where we would not have an entry. It's a sort of a backtesting reviewing session in which we're just gonna replay in our mind what happened and see where we could have entered a trade and where we could and can in the future do better. I also need to remind you that this specific week, the first week of April, started with April the 1st, which was Monday, and that in Europe was actually still Easter. And so, considering that that was still Easter, I would have honestly not have traded on the 1st of April. So we're going to replay the movement, check them out, and see what happened. This is also a little bit of a special week because we have the non-farm employment change on Friday, or NFP, which then means that from Wednesday after lunchtime we would not trade anymore. We would let the price movements do their thing. According to ICT, the algorithm is coded to allow liquidity to build on both sides of the market. And for this reason, the NFP on Friday at 8:30 a.m. is then something that can attack and offset that liquidity. So Wednesdays and Thursdays are like the Asian ranges ahead of the Judas swing of the NFP. And so there have been many things coded in the algorithm for these days. And so it's very important to avoid the non-farm employment change, or the NFP, non-farm payroll, and to avoid it from Wednesday and Thursday onwards. And then the next Monday we of course can be trading, no problem. Okay guys, so let's go back to the price movements. I have here already set our date and I set it for Thursday the 28th, so we're gonna just play the price movements after that. And let's start with our analysis. Our analysis on the 1-day time frame. Let's start by searching for liquidity and for fair value gaps. And so let me put them here very quickly. We have this level of liquidity here. I'm going to use the consequent encroachment in this case of this candle here because it's really like here at this precise price level. So I kind of like it when the consequent encroachment is very, very close to these like super precise levels. If I can set it up nicely. Let's see, what else do we have? We have here sell side liquidity. And then for the fair value gaps, what I usually do is I use the fair value gaps of from nephew Sam as an indicator, and I'm just gonna place it here. And I also am gonna be using the silver bullet times, which is actually being coded by Fahmi Eshak, and it's probably the best indicator that I know for the silver bullet times. And by the way, he's also a student of mine from the mastery, and he has done a great job with that. Go give it a follow, guys. Try it out and let me know if you like this indicator as well. Now, we put the fair value gap from nephew Sam. Let's see the fair value gaps that is showing us here. So we have one big here. And then as you can see, there are a couple of other fair value gaps that are not being really shown. This one that has been touched upon, we have it here, that then got closed right here. So before the liquidity, we can place it on. And then the last thing that we're going to do on the 1-day time frame is try to understand what is our bias for the next day. So until this moment, what I can see is that our bias would be bearish, and specifically we would be expecting the price to go lower than this for the next day. Okay, so just keep it in mind, this is just for the next day. So I expect the price to be going lower than this, and then we will see where the prices want to close, but I expect it to take out this liquidity level. Now let's go to the 1-hour time frame. And on the 1-hour time frame, what I want to do is I want to place vertical lines for the days, because I like when I have these vertical lines in red. Let's also sign up the whole week. This is gonna make it a bit easier. This is for Wednesday, and we're gonna stop trading Wednesday after 12. So we're not gonna be trading before. You can see there are some news during this week. And if we just look at the red news, we have red news on Monday at 10 a.m. We have on Tuesday actually throughout the whole day, we have the German one, which influences the euro. And at 10 precisely a.m. we have the jolts. Then on Wednesday morning we have this one at 8:15, and then another one at 10, and then at 12 the Federal Reserve Chair is going to be speaking, so that's also going to be a little bit interesting. So it's a full week, guys, it's a full week. As I told you before, now we're just gonna play the price movements from here, so from Thursday the 28th until Monday like night, so at midnight, and let's see what happens. I don't want to be analyzing the price movements before, because I find it that sometimes it's a little bit like losing your time. I prefer to wait until midnight and then I start my analysis. And also during the weekend we are not trading. Okay, and here we are, midnight Monday. Let's analyze a little bit the price movements on the 1 hour time frame. So where is our liquidity? We have a liquidity level here or here, whatever you would prefer to have it. And as well, we have our sell side liquidity here. I'm really trying, guys, to keep things always easy and understandable. I don't want to overcomplicate things. This is also something that's really, really important for me. Here we have this fair value gap. And yes, I know that you noticed that I put two fair value gaps together. It's just because for me it's easier to then understand where is the middle of this combined fair value gap, because I noticed that sometimes the price is not going to just retrace back to this one, but also to this one. And when I see them combine, I can see that here is the midpoint, and here is basically exactly where this candle has touched until. So it actually went through this one and then touched on this one. And I don't know, but like makes more sense to me. Something that's worth noticing is that on Monday, even if it was just and still Easter in Europe, actually there is only one news, which is at 10 a.m. New York local time. And so if we now go and we start trading from 3 a.m. to 4 a.m. New York local time, we could actually be trading at that time. There are no red news, but we're going to have to keep in mind that the movement could be a bit weird or flat because it is Easter in Europe. So I actually want to go and place my vertical lines that regard my trading times. So it's going to be from 3 a.m. I'm going to set it in orange until 4 a.m. So I'm going to go probably a little bit later, but I'm going to sign it right now in the 1 hour till 11. And then from 2 p.m. to 3 p.m. Remember, guys, always set your charts at New York local time. Okay, that's very important. Now that we have our trading times, and by the way, I could have just like used the application from the silver bullet times. Like I can show you here how it looks like. You see all the vertical lines here, and they're super good, super precise. You can use that as well. I just sometimes prefer to do it by hand. Okay, now let's go to the 15 minutes time frame. 15 minutes time frame. Let's blow up our price movement so that we can observe them better. And let's play each candle. Those are going to be our Monday opening. And each candle is worth 15 minutes of price movements. I'm going to stop it here. So here on my daily, I'm gonna have here at this level my buy side liquidity, and here, as you can see, I have another high, so this also can be considered, because here if I consider actually the consecutive encroachment of this candle, or even just the body, it would actually have the same level as this wick, which is interesting. And here I would have my sell side liquidity. Awesome. Now, this is on the 15 minutes time frame. For the moment, I do not see any fair value gaps, and I do not see the price taking out a previous liquidity level if we do not consider this. So if I actually go here, this could be considered as the price is taking out the buy side liquidity level. But it's also true that here the price is touching in this fair value gap. So I want to assign this fair value gap as well and see if it's actually an important level for me right now. I'm gonna go now on the 5 minutes time frame, readjust and reset the chart a little bit and see what happens. So here I have another fair value gap, which I'm gonna assign. Okay guys, now we are on the 5 minutes time frame. I actually usually use the 3 minutes time frame, and I would always change between the two, between the 3 minutes and the 5 minutes time frame. I kind of feel like I have a little bit more control over the price movement like that. So let me readjust the chart and let's start playing it slowly. So each candle from now on is gonna have, and I'm gonna make it a little bit like slower. Each candle is going to be worth 3 minutes of price movement. So what I would like to see is actually, I would like to see the price going either higher or lower and take the previous liquidity level. So we have here liquidity level and we have here liquidity level. It feels like that the price right now, so right before 3 a.m., is actually kind of in the middle. It feels like it's in the middle of the day of the price movements until that moment, and so we are not in discount, we are not in premium right now. We have this little fair value gap here that's being kind of sort of balanced by this week, and then this week tapped back into it. I really am curious at this point to see what the price is going to be doing next. So let's start playing the movements and let's see what happens. Oh, okay. Look at that. The price tapped back into this fair value gap. Oh, look at this. Now it's going higher. It really reacted. Oh, look at that. Beautiful. The price really reacted big time out of this fair value gap and touched back into it and just went higher. Look at this here. It took out our previous buy side liquidity level and is now between this fair value gap and this fair value gap. So this is something I wanted to see. I wanted to see the price taking out buy side or sell side liquidity, so one of the two levels. And so check, we have our first checkpoint. Let's see what the price does next. So I kind of want to play it even slower because it feels like that the price is really playing fast. Okay, it's a bit too slow. Let's play it like this. Going even a little bit higher, okay. Creating another high. And so notice this, the price went actually higher than this fair value gap. So this fair value gap is not valid anymore because we can see that the price went higher and now it's starting to go back lower. So first we want to see the price taking out liquidity, going lower, and in this lower movement we would like to see the price doing two things. Number one, creating a fair value gap, creating a big enough displacement. And remember, in this movement here, so I don't care that here there are fair value gaps, kind of want to see that the price creates a fair value gap here, that the price takes out also a previous level, so a previous low, for example, that would be awesome, and that there is big enough displacement, and then I'm gonna enter the trade. So we keep observing and looking at what the price is gonna be doing next. And let me take this out, don't wanna distract us. Okay, just a moment, guys. What happened here? Let me blow up the price movements. We are in the 3 minutes time frame. The price went higher, took out buy side liquidity. Did it create a fair value gap in this movement? And yes, here I have a fair value gap. This is the reason why it's so important to be able to spot fair value gaps with the naked eye. So we do have a fair value gap here. Did the price went lower? Yes, it did. Did it take out a previous low? Yes, it did. We can see it here. So the price did take out a previous low. It went lower and then it retraced back higher into the fair value gap on the 3 minutes time frame. Would I enter this trade? Because I kind of see all the confirmations that I wanted to see, and look at this wick, look at this precision. It really went right at the level of this candle and not much higher. So I can tell you guys, I would actually take this trade. I would enter the trade here, that's perfect. I would place my stop loss here and I would bet that the price is gonna go lower. My first level, like really the first level would be here, would be this low here. My second level would be this one, so here. And my third level, let me see, yeah, would be the next sell side liquidity level. Even a little bit before sell side liquidity would probably be here. Now, if I have to enter now, where would I place actually my take profit? I can tell you guys, I would like the safest bet is until here. But looking at the price movements, I would actually place it here today. So let's see if I'm right. We move it here. I enter the trade. I'm convinced. I'm jumping into it. And the price is going lower and lower. You see, guys, it's also important to see how the price reacts off of this fair value gap. Now it touched it a little bit in the middle. I want to see if the price is going to retrace back or not. I believe it's not. I believe that this is actually what we wanted to see. Whoa, okay, look at that. Whoa, look at that. Okay, let me play it. Until 4 a.m. in the morning. Let's see what the price did. Okay, guys, look at that. This was our trade. We would have kept the trade from 3:30 until 3:45, so a total of 15 minutes for a risk to reward ratio of 6.12. Okay, we have here beautiful price movements. One thing that I can tell you is that probably this movement here was not the biggest displacement I've ever seen in my life. Okay, guys, this was the first trade. Screenshot it. This was the first trade for Monday, 1st of April at 3 a.m., 3:30 a.m. New York local time. Let's go to the second time frame in which we could be trading on Monday. Okay, guys, we are still on the 3 minutes time frame. I'm gonna switch on the 5 minutes time frame so that we can look at the price movements much better. This is Monday at midnight. This was our previous level of sell side liquidity that we used from 3 a.m. to 4 a.m. New York local time, which is not valid anymore actually. Our level of sell side liquidity would be here. Awesome. And our level of buy side liquidity would actually be the buy side liquidity that we reached before. So here, circa. Nice. What else has the price done? Has created some fair value gaps. We have one here. We have another one here. Guys, to be honest, usually I do not consider these small, very, very thin and tight fair value gaps. I kind of keep them in mind, but I do not consider them for real. They're not the real deal. Now, we remember that at 10 a.m. New York time, we actually had a red news folder. And so at 10 a.m. we're not going to be trading. So what time are we going to be trading? Well, to be honest with you, when it's a red news folder, I would at least wait until 10:15, 10:20 to start seriously looking at the price movement. So what I'm going to do is I'm just going to play the price movement right now until my yellow or orange line. Because the news can be, whew, look at that beauty. Going down and down. Whoa. Let me reassess. This is the reason why we don't trade red news and why we stay away from them before and after they're out. Okay, so it's about to be 10:15. Now I'm gonna do my... So we can see that here the price took out the sell side liquidity level that we had before, created this huge fair value gap. Yeah, let me make it a little bit bigger and a little bit so that we can look at it better and be more precise with it. And here we have another fair value gap, which we gotta keep in mind. Would I enter right now or not? I think I could be entering. Let's see what the price does next. I mean, guys, let's see what happens, but this movement is kind of big, right? Like, look at this here. It's really a big movement. So we were here before. This is always on the 5 minutes time frame, just to show you like the magnitude of this move. Like, this is how the price moves, like, okay, over the weekend, and then on Monday, this like kind of like, where was it? 3:30 we entered the trade, so kind of here we entered the trade and we capitalize on this, and this is the price movement with the news. It's really crazy. Let's see if there is something that happens that actually makes us happy. What I would like to see, guys, I can tell you is that, okay, if we consider the price taking out our liquidity here, okay, then what I would like the price to be doing is creating a new high and then reversing. And in this reversal is where I want to see the fair value gap forming. So I'm not interested in looking at the price entering this fair value gap. I'm not interested in a continuation. I'm interested in a reversal. Let's see. We keep an open mind and see what the price wants to show us, right? Okay, let's play the price movement on... Actually, let me go on the 3 minutes time frame. Here we are on the 3 minutes time frame. We can see that this fair value gap is kind of a little bit bigger, but I like to keep the one on the 5 minutes time frame. Kind of gives me a little bit more, I don't know, precision, control. Let's play. Let me play a little bit faster for us. So until now, guys, like you can see that the price is kind of continuing in the same direction. We have candles that are not like, they don't give me like crazy strength or crazy, yeah, crazy good feeling. Not these candles, guys, not these candles. But let's see what happens. Okay, it's 10:54, so it's about to be 11, and I do not see any entries here. Nothing that is interesting for me. Okay, 11 a.m. in the morning, the big red news happened. I do not see a reversal, even if this was our level of liquidity. And yes, even if like you signed other levels of liquidity, I do not see a reversal. And when we don't have a reversal, we don't have a trade. So let's jump up and see what happens between actually 2 and 3 p.m. New York local time. So afternoon time in New York. And let's play it together. Lunchtime, we never trade during lunchtime. No matter what you do, we do not trade on lunchtime. And now we're approaching 2 p.m. New York local time. So let's review our liquidity levels. This is definitely not our sell side liquidity anymore. Our level of sell side liquidity is here. Our level of buy side liquidity is still the same one that we had before, and we have this big fair value gap, which I wanna highlight here. And let's make the price movements a little bit bigger because I want to see precisely what's going on. So I kind of need to blow the price movements up. I don't know if everybody's like me, that they keep like resizing their chart all the freaking time, but this is like basically my main activity as a trader. I resize charts. Okay, so let's set our liquidity levels. So after lunchtime, we have here a high. So I kind of want to set it as a short-term high. Short-term, let's say, buy-side liquidity level. We also have here a short-term sell-side liquidity level, let's say. It's not really a strong level, guys, okay? Like, so keep that in mind. It's not really a strong liquidity level. So, yeah. Even if the price does something with it, like this is our main level, okay? And then buy the liquidity is so far away. But I still want to see if there is something interesting that happens that I want to enter. Here there are two actually fair value gaps. Here there is another fair value gap. So let's play the price movement and let's see what happens. I'm gonna play a 0.3 so we can really go slow. So first thing that I want to see, or that I would like to see, is the price to take out a liquidity level, even if it's short-term liquidity. Why? Because we are in the afternoon. And when we are in the afternoon, a short-term liquidity level could be still interesting for us. It's not interesting every time, so keep that in mind, but it could be interesting. Now, what is going on here? The price kind of stayed in the range, and it did not for this moment went higher or lower than the two levels that we signed up before. Okay, so the price went lower than this level here. It's kind of touching, entering, can you see here in this fair value gap? Let me make it even bigger. What do you think about that? Well, if it's true that this is a strong liquidity level, which I honestly do not think it is, because at 1 p.m. the price was kind of like also here and then here, so like I don't think this is a strong liquidity level. But if it was, what I want to see is the price going lower than this liquidity level, going lower and then reversing. And in this reversal I want to see a fair value gap. Let's see if that's the case. Let's see what happens. So look at it here. We have a fair value gap because we have a fair value gap, but it's not on this movement of the price. It's not from here to here while the price is reversing, but it's actually before. It's while the price is taking out this liquidity level. So I don't consider it. It's not a sexy fair value gap for me. I mean, guys, it's already what, 2:45. 250, and the price is just slowly right now starting to reverse, but to be honest, I don't trust these movements. Okay, it's basically too late to be trading in the afternoon session. And that will be all for Monday, 1st of April 2024. I entered one trade, which was in the morning, London session from 3 a.m. to 4 a.m. New York local time. I checked the price movements from 10:15, 10:20 until 11 a.m. New York local time, and also from 2 p.m. until 3 p.m. New York local time. And I did not find any other trade for Monday, 1st of April 2024. If you like these sessions and if you like this type of trading reviews, leave me a comment here below and give it a like and share it. I'm gonna see you here soon. Thank you so much guys for your support. I'm gonna see you in the next one.